Welcome to Berman's Call. Larry Berman is here to take your questions on large cap stocks and ETFs. You can reach him toll free 1-855-326-6266 or email Larry at bermanscall@bnnbloomberg.ca. Larry, it's great to have you here. Thanks for joining us. What's top of mind for you? I see U.S. stocks hitting another record high today.
Well, that's obviously top of mind. But this week, we get a huge percentage of S&P 500 market cap reporting, including 4 of the big 7 tech names. For me, it's all about what they say about capital expenditures regarding their AI spend and what they're doing on their AI spend. We've seen a massive ramp up in semiconductors in recent weeks. Market is overly enthusiastic, I believe, about peace in the Middle East. We've got central banks, Powell's last meeting. The week is chock full of stuff. I normally don't focus on Canada, but we get a mid-year fiscal update from Canada. A plan from the Carney government to launch international interest in Canada investing. So there's a lot of things right now that are moving markets, and all of them are important. Earnings matter the most. And so, again, what do these big companies say about the go forward is going to matter for the continuation of these all-time highs.
And we have with Microsoft, with Meta, and I think Alphabet, we have in the past seen examples of investors getting alarmed at the massive CapEx plans.
Well, alarmed when Oracle, for example, did it. That was a big thing for them. It was kind of unexpected. And initially the market said yay, and then said, oh, wait a minute. How are they going to finance this? And so I don't think that matters for those big names that are throwing off just bags of cash and have deep balance sheets.
People will indulge it for now.
For sure.
Yeah.
We need to build. I don't know if you play with any of these AI agents. It's incredible the productivity that they're building in, and we've got people at our shop working on different projects. It's pretty amazing what productivity is going to bring.
Larry, you referred briefly there to the Middle East. Do you think this thing could drag on, maybe keeping oil prices high?
Andy, I hate to say it, but I'm an advocate and a supporter of Israel. I don't hate to say that, but my lens on the world in that line of thinking, this is Israel's 9/11 moment. There's an opportunity to take out a state sponsor of terror, the IRGC, that's really driving decision-making in Iran. If not now, never. So I think it keeps going. I think that's the unofficial agenda. And everything else in between is posturing and political balancing.
That's a tall order, though, when there's that Revolutionary Guard is so entrenched.
They are indeed. But again, if not now, when? And so I think that's coming. And so more hot war. I don't advocate for the policy, but every president in the last 10 turned down Israel's request to go do this. Trump was okay with it. And so obviously he's got some political backlash he has to balance out right now.
So we should stand by for certainly oil prices remaining higher than they were before February 28th.
So last week in the educational segment, we covered what the really forward-looking markets are telling us. Very short term this year, if we look at December crude oil futures, $70. If we start trading below that, we're past the worst. If we start getting above 80, we really start to need to worry. And since the attack on Iran directly after February 27th, prices have bounced between $70 and $80. So the market is unclear which way to take this. Equities are looking, okay, but the futures market in terms of crude oil is uncertain at this point.
Okay, we're going to have to take a break. Larry is here to take your questions on large cap stocks and ETFs. You saw that number just a second ago. There it is again, 1-855-326-6266. Let's kick off here with an email from Greg. I'm considering further investment into ZCOM, the Bloomberg Commodities Index Tracker, considering its heavy weight in oil. What are your views regarding a 1 to 3 year investment time horizon and it's waiting in commodities?
Yeah, so going back to what we were talking about off the top, is this a temporary disruption or is this something that's going to last years and years? If it's going to last years and years, the equity market is not going to continue to make new all-time highs. So the equity market is saying this is temporary. And if this is temporary, you shouldn't be investing for 1 to 3 years in commodity trend following, and so that would be, my answer. Figure out which one, for you makes the most sense, and which one, So if you believe it's long term, short equities, long ZCOM is probably not a bad pair trade from a market perspective. I'm not recommending you go do that. I would not be trading commodities higher at this point.
Because you're worried about global economic growth? Or?
Yeah, well, first of all, I don't think this is permanent. I think all these global issues are temporary. There's definitely been some damage done to infrastructure. But again, when we look at the longer term forward curves, I'm not sure the market is telling us that this is going to last for 1 to 3 years.
Right. Yeah, so oil in the present, immediate delivery oil is extremely expensive in some places.
It is, but further out,
yeah.
If you look at the back months, we're going to go back to $50, $60 oil down the road. And, you just don't want to get involved with these very steep backwardations and trading these commodity baskets.
Right. That's ZCOM, the BMO Broad Commodity ETF, about 37% in energy, 27% in agriculture, which is interesting, quite a high weighting. Okay, thanks for that question. An email from Paul. Despite the volatility in oil and gas prices, do you see PPLN as a decent investment, especially for the dividend? Or would you invest at all in ONG?
Yeah, so this is a pipeline, equal weight pipeline index. There's 5 names in the index, roughly 20% each. So relatively diversified in terms of pipelines, but only pipelines. Again, if you think this is temporary, you don't want to be investing long-term in the space. If you're a tactical trader, I'm okay with it. And this is an okay vehicle, for trading purposes. It's probably fine. Not huge volume trading. So if you're a big trader, this is probably not the vehicle that you want to be trading with.
Right. And the holdings, South Bow, the spin-off from TC Energy, Keyera, TC Energy, and Bridge, and Pembina are the holdings. Pretty narrow list. Okay, we have Andy in Calgary. Go ahead, Andy, please.
Hello to the both of you, and thank you for taking my question.
Thanks.
Larry, I'm curious about the company Hormel Foods, HRL, the ticker symbol. I know Hormel and a number of its competitors, this sector hasn't done very well, but they're down quite a bit from their highs. This is not a bad time to maybe put some money into it. I just going to hang up and listen to your thoughts on that. Thank you very much.
Hormel Foods, the meat company.
Yeah, a lot of them, Conagra, a lot of these names that trade in the food space. They ramped up over the past decade and the past 2 or 3 years. They've now all come back to earth. And so as a value investor, when I look around and say, hey, where should I place money there, where things are cheaper, I love this sector. I think it's compared to the valuations other places in the world, and we're all going to need to eat. So foods matter. Input costs are a consideration over the next year, for sure, because a lot of these ag input costs are going up because of crude oil and some of the disruptions that are happening coming out of the Middle East. So they're short-term factors, but a lot of that is already discounted and priced in to current prices. So I like them here. I'm actually overweight a bunch of these names in my portfolios right now.
The food names?
Food names, because they're cheap.
Right. And people have to eat. Do you see them as a defensive play, or why would you say there'd be a rebound?
eventually it turns around. Again,
Right.
if I knew exactly when, which I don't, but we look for things that are not semiconductors at the moment, that are gangbusters, fully priced and pricing in an incredible growth profile for the next number of years. I suspect that goes sideways for a few years. And what happens historically? Money comes back to where things are cheap. It comes out of things that are expensive. And this is a sector that I like right now for that.
Okay, we are getting a lot of commodity questions. We have an email from Kevin. My question is on USOI. It has followed the price of oil down over the past year or so, but it has lagged behind with the rally in oil. And so this one is, it's a covered call ETN that simply tracks, as far as I can see, USO, the big oil price ETF.
Yeah, if you're bullish, buy USO. If you want yield, then a covered call strategy is going to give you yield, but you remember you're selling away the upside.
Yeah.
So for that extra yield you're getting. So if you're bullish, USO is not something you want to invest. USOI is not something you want to invest in unless you're bullish and you need current income.
Right.
Okay. If you're bullish, USO. If you're bullish and need current income, USOI, and you must expect USOI will underperform USO in a strong up market. In a flat market, sideways market, down market, USOI probably going to do a little bit better.
Okay. We have a question, Joe in Montreal. He wants to ask about a stock that's in the news. Go ahead, Joe, please.
First of all, Andy, say it isn't so. You're not retired, are you?
Thursday's the last day.
Oh,
Thanks.
man, Andy, it's like DiMaggio leaving the Yankees, Mr. Rogers leaving the neighborhood.
Now you made my
Great
day.
news,
Thank you.
Please. Thanks for all the
Joe.
good times, Andy.
Thank you, Joe, for all your support over the years as well.
Larry, I have 600 shares of ARC Resources. With the new Shell taking over them, what happens when a U.S. company takes over a Canadian company? We're supposed to get shares and some cash. Is this a good deal for us? I'll hang up and listen. And goodbye again, Andy. I salute you.
Thank you very much. Thanks.
So I'm not an M&A expert, and I haven't fully evaluated the deal. There's probably, when a foreigner comes into Canada, government has to kind of give their stamp of approval. When you look at the deal and the market behavior right now, looks like there's some bit of doubt that this could happen. I would expect it will happen, but the market is giving it a slight little bit of doubt. I think the purchase price was 32.
Let me look that up. We did see. Sorry. We saw some selling in Shell today, but that often happens when a company plans to issue a bunch of stock. And
again, I haven't evaluated the deal, but usually on something like this, you price it up. What are the odds of it failing? Yeah. Because if it fails, well, this stock's going to come back into the mid-20s. So that's what you got to weigh, and I don't have an answer which way, if it's a good deal or not.
Shell stock down about 2.5% today. Okay, we have an email from Graham. I'd like Larry's opinion on ZFH as a way to generate higher yield. The price has been more volatility than I was expecting. I'm wondering if this is connected to issues surrounding private credit. Okay, Larry, can you remind us what that ETF does?
Yeah, so it's high yield and floating rate. So it has nothing to do with private credit whatsoever. This is public market securities. It has everything to do with credit. So BMO does an excellent job in minimizing the interest rate risk behind investing in high yield debt, but there's credit risk. And so whenever equities get volatile, credit spreads tend to widen out, and you'll get some downside price action or more volatility in the name. Right. But it's designed to extract the yield part of high yield without the interest rate risk or minimizing the interest rate risk in the portfolio. If you put it up against the just owning HYG, for example, in the U.S., which would be the equivalent holding, it's actually outperformed over, say, the last 5-year period by, almost 1% a year. So it's a pretty good exposure, and BMO's done a really good job at managing it for that credit risk. So I like it if you want to be in high yield.
Let's head to a new market, Ontario. Go ahead, Bally, please.
Hey, thanks a lot for having me. And my question is largely around, these two ETFs. One is SMAX, the Hamilton U.S. Equity Yield Maximizer, and the other one is JEPQ on the Canadian exchange, the JP Morgan Nasdaq Equity Premium Income Active ETF. And here is the question. The question is, in TFSA, I want to have, a monthly income stream. So are these good choices? Do you hold it? And if there is something better than this, what is that? So I'll just pause and listen in.
Right. So SMAX was the first one, Larry. And just to remind the viewers, it's the Hamilton ETF High Income. And sorry, I'm trying to work out what kind of stocks. Anyway, I think it's one of these equity high income. I think U.S. equity, sorry.
Yeah. So you've got the Mag 7 names with some option strategies for income in them. All these covered call, all the new ones that are coming out, they're all designed for investors who are looking for, higher income in their portfolios. The one thing I like about all of them is the tax efficiency. A lot of that income from foreign corporations, because of the option overlay, is coming in as a capital gain. So tax efficient, but if you're using it in your TFSA, you're missing out on that benefit completely. So it's ideally suited for a taxable account.
Well, that's interesting.
Versus a non-taxable. Doesn't mean it doesn't work there, but you're losing some of that tax benefit. And so regardless of the product that's income oriented and who drives it, you kind of got to look at a lot of those factors, under the hood. In terms of what's appropriate for you if the volatility is right. If you're taking market risk, why wouldn't you want the most total return possible? You can generate income out of your TSFA just by withdrawing, right? There's no tax implications. So you can generate an income stream on your TFSA that way. You don't need the underlying fund to have income in it.
Yes, yeah, it's interesting. I guess people feel, well, this is trouble-free. I just get it.
It's not trouble-free. You're taking market risk. It's generating extra income, but you're giving up a lot of upside when you do it.
Okay. I think we have to take a break. Today's educational segment, we'll be looking in more depth at the massive capex by these tech companies. We'll be right back.
Larry Berman is one of Canada's top technical analysts. He's the co-founder and chief investment officer of Q Wealth Partners. To learn more, visit qwealth.com. Opinions expressed by Larry Berman are his own and do not necessarily reflect the opinions of BNN Bloomberg, its parent company, or affiliates.
Let's get to Larry's educational segment. Take it away.
Semiconductors have been ripping the last couple weeks since the market turn here. But really, if you look at semis relative to the S&P or anything like that over the last decade, they've been head and shoulders a multiplier above. But one of the tendencies that happens is market gets excited about something coming. Huge money runs in, could be a year or year and a half or two. And then it goes sideways for quite a period. So let's bring up the chart here, because what happens where we hear what's coming with hyperscalers and everything else this week, it's going to matter, I think, and we could potentially get a peak in markets. So if we look at the chart there, I've lost my screen here. Here we go. Sorry. No, now it's fading in and out. Okay, so if you look at these run-up periods, so in the 2012 to 15 period, this index went from the equivalent of 15 to 30. So this is a ratio chart in terms of logarithmic. So the move from here to here is the same as the move from 200 to 400. So we recently had this index go from here to here, and it doubled over a relatively short period of time. And each rally has been more intense in terms of the magnitude and less in terms of the time period. And that it matters a lot behaviorally for markets. So what we hear from the hyperscalers this week, what we hear about CapEx spend right in through NVIDIA's earnings a month from now is going to matter a lot for the continuation of this rally from pure perspective of semiconductors being the leader. Because there's no other sector right now that's really showing the leadership strength that we've seen here. So I think it's a big week from that perspective. And you know, that's again a big focus of mine. So for traders out there, you can try to play it, but I think we are very close to a peak trading top, and this thing can go sideways and consolidate for the next 6 or 12 months. Again, no reason to be bearish on semiconductors, but again, we've priced in a lot of good news. We need to get even better news than the expectation already built into the market for this thing to continue.
And I guess, too, Amazon and Alphabet are developing their own devices that are trying to reduce the stranglehold of the likes of NVIDIA.
Well, that's an excellent point you bring out there, because that is still a developing theme. Markets don't care about that. But those earnings then go to those guys instead of the other guys. So it's still net new dollars being spent in terms of CapEx. And that's really the focus, you know, in the tech space and the AI trade now. Can this continue? It's going to depend what a lot of these guys say about the go forward.
Well, Larry, thanks very much. My last day is Thursday, and I've been working with you for decades.
Andy, almost since the beginning. I was a guest on Market Call in 1999.
Whoa.
Very first week BNN was on the air. I know you came a few years later.
And
we started working together in 2007.
Oh, was it? On the show?
On Berman's Call, and which is in its 20th season now. So
Unbelievable.
I'm kind of sad to see you go. You've been
thank you.
such an anchor
you.
here and great with the people. You're well loved out there.
I wonder, is there a scary picture of us working back in 2007?
For me, after the pre-Ozempic days, I was a much bigger version of me. So that's scary to me.
Yeah. Well, Larry, thanks very much for all the insight over the years.
Yeah, a pleasure. It's always great working with you, Andy.
Thanks, Larry. That's Larry Berman. Larry Berman, of course, comes back with his insight, 3 p.m. Eastern Time every Monday. We've got the close coming your way next.